A bounce. This is the third and last trading style that you can use to trade a key level. I use these sometimes when I see a proper structure and I like to trade the bounce. However, it is quite rare and it is recommended, and I do recommend to trade the bounce only from a certain and specific daily level. You can try to trade the 4-hour bounce and the 1-hour bounce, but me personally, they are very, very specific and very technical and quite simple though, but I recommend using only a daily level for that. And to see a vivid bounce level in the daily chart, it does happen quite seldomly. So I do recommend paying attention to them, and if you see one, trade one, but don't focus on them. And that's the reason why only 10% of my trades, probably even less, are the bounce trades. 90% or probably 95% are going to be the false break trends, false break trades. Now the reason why I like the bounce trade is because usually the amount of risk is super small. And I'll show you an example, and you will understand why the risk in that kind of a trade off of a bounce level is going to be super small. That means that when you have a small risk, that means that the amount of stop that you're using is going to be extremely small. And perhaps the smallest stops and the smallest risks are with the when you're trading the bounce style of trading the key level. Now, as a small reminder, I'll teach you how to trade all of these styles in detail in a little bit later, and in fact in chapter 10. That's when you will learn how to actually trade it. For now, we are covering the basics, and I'm showing you how those styles look like, and then in the next lessons, we'll be talking about the important types of levels and how to mark them, how to identify, and so on and so forth. And that's the most important. Trading the level isn't as difficult as actually making sure that you've chosen and marked a correct level. Marking a level, as I've said before, can be very challenging and quite frustrating. So that's something that we'll spend a lot of time on, and only then we'll talk about actually trading them, which once again is not that very difficult. So about the bounce, we need a strong limit player. So we need to see a level at which a big player, a limit player, so-called limit player, is going to have his powerful, huge limit order, and we'll be able to see that in the price, that once the price comes to a certain level, it will bounce off of that price. And once we identify that kind of a level, we can trade a bounce style. So let's move to the computer screen, and I'll show you a bounce level, a limit level, so a level created by a limit player, but the bounce is the style that we can trade that level. Now, once again, this is a daily chart, and here we could see a very vivid limit player, as you can see in this location. So what is this limit player? What does it look like? And here, as you can see, we have 3 candles hitting precisely in the same spot into the level. Now this candle right here, it does not count anymore, so that's why I am marking it beginning with this candle, and these 3 candles, this is the limit player that we are looking for, and this is something that we can trade the bounce style from. Now this happens quite seldomly. Very often you'll have levels at which you'll have quite a few false breaks of the level, and in the middle, in between these candles, because these candles are pretty much the CSLs, and if you have a false break in the middle or some candle that does not quite get to the level and so on and so forth, this destroys the model of the strongest limit player, and the bounce trading style is no longer possible. So that's the reason why it is very specific and very precise, and that's why it is so rare to see this kind of a limit player and be able to trade a bounce, and especially because those should be traded from a daily chart, and the daily chart, one candle takes 1 day to complete, so you might be waiting for 3 months to find yourself a correct limit player and trade a bounce from it. So once again, the most important rule is that at least 2 candles have to be hitting precisely into the same spot, and this will be your limit player, and this will be the trace of that limit player. And the third one you can already try and trade the bounce from. So at least 2, preferably 3, but the more you'll add into your rules, the more seldom you will see these kinds of things happening. But nevertheless, I still think that you must know this structure and you must know this trading style of the key level trading family, and you must learn how to understand a limit player. And trading a bounce can be quite a good practice of fishing out the bounce structures. And if you want, even after this lesson, you can go into your platform, select the market that you like. Maybe you've already chosen a market that you enjoy trading, and maybe you've been already trading, as I recommended you to do with the indicators. So you can go to that market, go to the daily chart, and try find as many limit players, the bounce structures, as you can. That would be quite a nice thing for practice. Now here you can see that there are no interruptions in between the CSLs and no false breaks in between. So once again, if there would be a false break in between these CSLs, then the model of the bounce trading would be broken. We need these candles to be hitting precisely into the level one after the other. This needs to be extremely precise for us to be able to trade the bounce. And the idea of trading the bounce would be that we see the first one, the second one, the precise one, then we can see that the bounce structure is developing. And then once the price comes down to this level, we set out our limit order. So every other style, the true break and the false break, they're going to be traded with the stop order. And this is the only style that is going to be traded with a limit order. So not a stop order, but the limit order. So just know that for the bounce, you'll be trading with a limit order. That means that once you see that this kind of a structure is developing and the price, and perhaps you have this long candle here just opened, and you see that if we come to this level right here, once again, just like we did twice here, we will have the perfect bounce opportunity, and you'll set out your limit order, which would automatically execute if the price comes to this level, and you would automatically open a long position. So you would go into climbing prices automatically. And the perfect thing about the bounce, as I've said before, your stop is going to be very, very short. In this kind of a situation, you must never use a fixed stop. Never, absolutely never. Here you will not even use a calculated one, because I mean the technical one. You cannot use the technical one because there is no real place to, no tail, no candle to attach it to. Usually, as you can remember, the technical stops, we attach them to the previous high or to the previous low, and so on and so forth, as long as they're smaller than our fixed stops. So here, there is nothing to attach it to. And what you need to do, your stop would be just a few, maybe 2, 3, or even 1, but I prefer to use 2, 3 points below, in this case, below the level. So if the price actually moves lower, then that means that the bounce structure is gone and there is no reason to stay in the trade. So my stop here would be really, really, really short, a few points. And I would check the ATR, I would check the range, I would see what kind of an expectation I could have from this precise bounce trade. And I would then calculate my take profit. And in this case, when we have quite strong moving candles, as you can see, for example, this candle, high minus low, is 218 points. So using a 1-to-3 ratio here would probably make no sense. That's why, and the only reason is because your stop would be at the maximum of around 3 points, and 1-to-3 ratio, you would have your take profit at around 9 points. And that isn't really worth of a hassle of looking for these bounce structures. So in this case, I would perhaps use something like 1-to-10 ratio. So if my stop would be 3 points, I would have a take profit of 30 points. And sometimes these bounce structures allow you to take, and these are the only ones pretty much that allow you to take the profit to loss ratio, a ridiculous one, sometimes a 1-to-15, 1-to-20, which is not possible. Mostly 99% of the time, it's not possible with the false break. The true break, it is quite difficult as well. So only the bounce structure would allow you to have 1-to-15 or 1-to-20 as well. Because as you can see here, for example, this is the level, and this move here is around, it's 300 points. So theoretically, if your stop was 3 points, then you could actually take 1-to-100. And it is true. You can see this. This is a real market. It's not fictional or anything. And this is reality of what is possible in the markets nowadays. Well, of course, you wouldn't have a 1-to-100 expectation. This is a little bit too crazy. But you could quite easily see that the ATR, calculate the ATR, see the range, maybe there is some kind of a level above maybe this one here, just as a hypothetical example, which I don't like very much, but for the sake of the example here, let's say there was a level here, then you couldn't expect more than this kind of a move, but it still could be around 300 points. So it is still 1-to-100. I think that in this kind of a situation, 1-to-20 would be okay, 1-to-10 at least. So 30 to 60 point take profit would be just enough. And if it wouldn't work, all you would lose is 3 points. This is crazy. But again, this is all very, very seldomly, unfortunately, because if it was happening constantly, this is all that I would have been trading, because the bounce structure, the smallest risk, and the greatest potential return is in the bounce structure. But unfortunately, it's quite seldom. But you must make sure that you pay attention to these, because these are often what I call the free money. There is no free money in the market, so please don't quote me on that. But the concept and the ratio comes sometimes quite close to free money, and that's why I love trading the bounce structure. So yes, this is pretty much all you need to know so far at this point about the trading styles. And beginning with the next lesson, we'll be talking about the types of levels, how to identify them, how to mark them correctly. And then sooner, in a few chapters, we'll be talking about how to trade them. And by far the most interesting part will be chapter 11 and my personal Thomas Graylow trading strategy and my complete system, where I combine all of this into one in a simple, straightforward way of trading and comfortably making money on a long-term basis, and being very, very happy with this work in general. All right, enough talking. Good luck on your test. And once again, no homework. One last one with no homework. And I'll see you in the next lesson.